Happy Wednesday, everyone. It's Kim Hong here. Today, I'll be sharing with you guys a trade idea that has a potential profit of 130 pips. Without further ado, let's jump in. All right, this trade idea will be on Aussie CAD. RBA downplays Omicron's impact on Australian economy. Okay, so yesterday, the Reserve Bank of Australia, they actually concluded their monetary policy meeting, okay, with no actions being taken, okay, in terms of monetary policy. Well, it's pretty much widely expected, right? Because interest rate is definitely going to be held unchanged at 0.1%, okay? Well, the central bank has mentioned many times, unless inflation has fallen, well, unless inflation has hit the 2 to 3% target, all right? Otherwise, it is unlikely that the central bank will be considering a rate hike, okay? So that's for interest rate. Now, for quantitative easing, the central bank has already mentioned that the current pace of 4 billion Australian dollars per week of QE, of bond buying purchase, of bond buying program, okay, will carry on, okay, until February 2022, at least until February 2022, all right? Meaning, when it comes to February or close to February, they will be carrying out an evaluation, okay, on the current progress of the economic recovery before deciding if they should stick with the 4 billion Aussie dollars per week, or maybe reduce it lower to 3 or maybe to 2, okay, billion dollars per week. So the adjustment of QE, all right, the pace of QE will, if it's going to happen, it will only be taking place during the next meeting, which is February's meeting. Okay, I think the actual date is January 31st. Okay, January 31st, 2022. All right. So not very sure why they don't have a meeting on February 2022. Okay, but they probably just decide to carry it forward. Okay, a few days earlier, just so that any amendments to QE tapering, okay, can be carried out as soon as February arrives. All right. So yeah, yesterday they just hold everything unchanged as expected. And regarding the Omicron variant, all right, they actually highlighted a slight tone of optimism. Okay, they actually indicate that the emergence of the COVID Omicron variant is actually a new or it actually has a new level of uncertainty. Okay, it's actually a new source of uncertainty. Okay, but okay, they still feel that the RBA still feels that it's unlikely this Omicron variant will have an impact or will hinder the economic recovery in Australia. All right, and with that, the central bank is still expecting the Australian economy to return to its pre-Delta state. Okay, during the first half of 2022, which is actually, I would say, slight hawkishness, okay, slight optimism coming from the central bank, okay. Although at the moment we don't really have that much information on the Omicron variants, okay. So we'll see how it goes, all right, because it's not only RBA, but the whole world is still waiting for more informations from the experts, okay, regarding the Omicron variant, okay, whether or not it's more contagious, to what extent, and it's more deadly, and things like that, all right. So that was what took place during the RBA's meeting yesterday, okay? And from one meeting to the next, okay, today we will actually be hearing from the Bank of Canada, all right? And similarly, okay, they are expected to make no changes to monetary policy as well, all right? One reason is probably because they just want to, hope, because remember, okay, they actually just put an end to the quantitative easing program, okay, just last month, okay, during their meeting last month. All right. So it is not expected that they will, act that quickly again. This time around being a hike in interest rates. Okay. So it is probably like maybe mid or maybe early next year, okay, that the central bank will actually be carrying out a hike in interest rate or something like that. All right. Basically monetary policy tightening. Okay. So, this time around, the central bank may want to just adopt a wait and see approach, waiting to see how the Omicron variant unfolds, and before evaluating how it will actually impact the Canadian economy. All right, and so pretty much expect the Bank of Canada to hold everything unchanged, but all right, they may actually highlight, the recent economic progress being made in Canada, okay? Remember that the economic data releases for Canada for recent months has been quite strong, okay, which actually lead to which is actually the reason why the Bank of Canada decides to end QE once and for all during the previous meeting. Okay, so nonetheless, okay, we should still be paying attention to what the central bank's view on the Omicron variants is. Okay, because if let's say they actually send out a dovish tone on saying that this whole Omicron variant may actually push back rate hike timeline and things like that, okay, then we may actually be seeing a weakening in the Canadian dollar. However, okay, if they were to be as confident as the Reserve Bank of Australia saying that, this whole Omicron variant, yes, it's too early to tell, but it is unlikely that they think that it's going to, impact the timeline for interest rate hike. That means, okay, they are very confident that the Canadian economy is resilient enough for another, for this whole Omicron variant, all right? Hence, we may actually be seeing a strengthening in the Canadian dollar. So, tonight, later on today, during the meeting, we may actually be seeing a strengthening or weakening of the Canadian dollar, right? So as of now, there's no, I would say, clear direction, okay, for Australian dollar, for the Aussie CAD, all right? So if we were to look at a chart, we can actually see that since the start of this week, okay, let me just put a line here, as indicated over here, this yellow line, okay, since the start of this week, which is like just Monday, all right, this pair, Aussie CAD, has actually been ranging or trading within the 50 pips consolidation or range, however you want to call it, right? So it's some 50 or 54 pips range. And over here, let me just put a line again. This candle over here, okay, let me just delete the first one. All right, this line over here actually indicates the time when the RBA, okay, the Reserve Bank of Australia, was announced the monetary policy decision. All right, and it was rather hawkish, I would say, because of the optimism on the Omicron variants, right? Because they were very optimistic that it's unlikely going to hinder the economic recovery in Australia. So we actually see a strengthening of the Australian dollar against the Canadian dollar. But for some reason, all right, the strengthening was rather brief. It wasn't a very concrete, I would say, it's not a very strong or bullish or hawkish kind of tone coming out from the RBA. Okay, it's positive. Okay, we all agree that it's positive. So we see the strengthening of the Australian dollar. All right, but then right after the next candle, this chart is based on the H4 time frame. Okay, so right after this bullish candle, we actually see that the Aussie CAD actually come back down. All right, and at the moment it's still trying to break above this consolidation zone, okay, but still to no avail. So later on today, we may actually stand a chance to see the Aussie CAD break out of this consolidation zone, okay. Hence, depending on how the tone of the Bank of Canada turns out, all right, if they were to be hawkish, then we may actually be seeing a strengthening of the Canadian dollar, all right, and this will actually push the Aussie CAD downwards. And then if that's the case, we will be looking for a sell opportunity. Okay, we'll be looking for a sell trade at the 0.895 level. Okay, well, you probably have to break the 0.90 level. Okay, because if we were to look at the level right now, okay, let me just put a line at the 0.9 level. Okay, so okay, maybe I should just get a different color. Let's just take blue, maybe. Yes, okay, great. So as you can see, this as indicated by this horizontal blue line over here, it's actually the 0.9 handle, all right? Psychological level, round number level, round figure, whatever, however you want to call it, okay? Key level and things like that, okay? So since the start of this week, or maybe even like last Friday, for the last few hours of last Friday, it has been trading along this 0.9 level, okay? Should it break upwards? Should it break downwards? Well, we have to wait and see, right? We need something more impactful, something with a strong conviction to say that the Aussie should trade higher or lower against the Canadian dollar before we see price move towards that direction. And guess what? The Bank of Canada decision may actually play a role in this breaking out of the consolidation zone or breaking above or below this 0.9 handle. All right. So yeah, at the moment, we just wait and see. If let's say, the Bank of Canada were to turn out to be hawkish, we may actually be seeing the Aussie CAD moving downwards. So at this sell entry level of 0.895, okay, our stop loss will be around 80 pips or 90 pips above above the entry level. Okay, it will be around, it will be behind this consolidation zone. Okay, well, in this case above. All right, so it'll be around a 90 pips stop loss, and then our take profit, okay, would be at the 0.882 level, okay, which is 130 pips from here all the way to here. All right, 130 pips take profit. So 130, 90, probably like 1:1.4, 1.3 kind of risk reward ratio. Okay, so that is for the case of a sell. Now, if it's a buy, okay, if let's say the Bank of Canada would say that, depending on how the Omicron variant unfolds, we may actually have to push our interest rate hike further backwards. Okay, backwards as in like, postponing it further back into the year, back to the later part of the year of 2022. Okay, then we may actually be seeing some weakening in the Canadian dollar. Okay, hence we can actually expect the Aussie CAD to break upwards out of this consolidation zone. And if it actually hits the 0.905 level, once again, clear the 90 level, all right, then we can actually be looking at a buy. Okay, our stop loss will be somewhere around 0.897, 896, 897, which is around like an 80-ish pips or stop loss. All right, and our take profit would be at 0.918, which is 130 pips. So it's around like maybe 1:1.5 risk reward ratio. All right, so yes, tonight, or rather should I say later, okay, depending on which part of the world you are located in, okay, that there will likely be trading opportunities for the Canadian dollar, not only for the Aussie CAD. All right, so if you guys want to have a preparation for this Bank of Canada, what to look out for and things like that for the Bank of Canada event later on today, all right, then head over to jindaotai.com, all right, sign up for a free membership of our Traders Club members, our Traders Club community, okay, and also you can visit the YouTube channel as well, okay, Jintao Tai's YouTube channel as well. I actually did a preparation, okay, for the Bank of Canada's monetary policy decision, all right. I think it was yesterday, correct? I think it was yesterday, correct. So I actually did a preparation to tell our club members like how or what are the things that we should be paying attention to, okay, in terms of the Bank of Canada's monetary policy decision. Okay, so as usual, if this trade idea were to be triggered, okay, I will inform you guys again on the Traders Club community in our Agrofin platform, okay, community platform. With that, any more things do I have to cover? No, that's all. Okay, so with that, I'll see you guys tomorrow during the currency call. All right, bye for now. Take care. Happy trading.